Emergency market update. Crypto markets are breaking down. Stock market is taking a hit. We definitely have to have a look what's happening in the markets right now. In this video, we're going to cover where we are right now, how did we get here, what is likely going to happen next, and what you can do as an investor in the current market conditions. So let's dive in. All right, so what we're currently looking at is the Bitcoin weekly chart. So every single candle here represents 1 week. What we can see is that in the recent history, we have seen a breakdown of our highs from 126,000 all the way down to 98,700, which was a 22% drawdown from the all-time highs in recent weeks. And the breakdown started round about Trump's announcement of the 100% tariffs for China. And yeah, we can see a drawdown all the way to this weekly line, which is the weekly 50 EMA, so the average of the last 50 weekly candles. That is where we are standing right now, again at a 20% drawdown from the highs. And we can see we have breached the previous lows, which were at around 107k. That was a very key support level for Bitcoin in the short term. As we can see, there are multiple weeks where this level held as support. However, now we have broken it. Now the next line in the sand is where we are right now, in conjunction with this previous swing low that developed here at around 98k, and that's exactly where we also reached during the spike yesterday. Truly, this is a line in the sand, we have to say as it is, because when you look at the weekly price history here, we can see that throughout this entire bull run, the price always reversed on this weekly red line, which is the weekly 50 EMA. So this is a key support level. This has held here in April, it has held in September 2024, and it also held all the way back in September of 2023. So every time during this bull market when there was a correction, price respected this level and continued higher from there. So this is where we are right now. We are really at a line in the sand here, and this used to be, during this entire bull run, the singular support level that has always held price and marked the bottom before the next leg upwards. The question is, what has really happened that caused this panic? So basically, how do we get to this 20% correction from our highs of 126,000? There are multiple reasons for it. On the one hand, the tariff uncertainty arose again due to Trump's 100% China tariff announcement on social media, which sparked a lot of fear in the markets and resulted in a huge correction across Bitcoin, but most specifically altcoins, which suffered a lot. We've also seen that the government shutdown in the United States, which has now been the longest it has ever been, has definitely caused uncertainty among investors, as key economic data like jobs reports and many others have been delayed and have not been issued, which means for investors and analysts alike, there's no clear visibility on the healthiness of the largest economy in the world, specifically the US. And that has caused uncertainty among investors. We have also seen the Fed in the latest FOMC meetings has issued mixed signals. On the one hand, they reduced the Federal Reserve interest rates by 25 basis points, which was expected by the vast majority of investors, and they followed through on it, which was good. And additionally, they also stopped their quantitative tightening policies, where they currently still extract around $5 billion per month from the market, and that basically that missing liquidity also has an effect on the prices of risk on assets. This is what they stopped, and it will come to an end by December. By then, the Federal Reserve will maintain its level of the balance sheet. Question mark is, will they start quantitative easing policies at some stage? We don't know as of this point, but we do know that stopping quantitative tightening policies is a good sign. On the contrary, however, they also issued mixed signals whether the Fed will continue to reduce rates in the December FOMC, which as of before the Fed's FOMC meeting recently was almost expected. But during the press conference, Jerome Powell and the Federal Reserve took a more hawkish stance on the outlook and noted higher inflation as potential risks for further rate cuts. So this is what sparked the most recent panic and the 20% drop in Bitcoin and altcoins specifically. The true question is, what is likely going to happen next and what you can do as an investor? If you liked the video until now, I would highly appreciate if you could subscribe, because on this channel you receive key market insights every single week that you as an investor shouldn't miss. So what is likely going to happen next? As I said, on Bitcoin and consequently for the whole crypto market, it's extremely important to see what is going to happen next. If we lose this weekly 50 moving average, which has held price all the way during the bull market, we are likely going to enter at least a short-term bear market with prices dipping further, maybe until, you know, the 70, 80K range, but, you know, eventually it could go all the way down to the 60 to 50K range, where we also have this 200 moving day average, which is also a respected EMA in Bitcoin's history. However, we're not there yet. So what we really have to pay attention is how this weekly candle will close and how the next weeks are going to play out. If we start accepting above the weekly 50 EMA again, then this can be a very good and bullish sign for a continued leg up, as we have had in the past. However, if we start accepting beneath it, we're likely going to enter a short-term bear market. While the macro conditions overall look bullish, again, we have lowering interest rates, we have the stopping of QT, we have overall business expansion in the US, and the economy is at a healthy place, also in other places around the world. There are still many risks. Again, what you can do as an investor is always to do educated guesses. There are no certainties in financial markets, and that is key to understand. But with strong technical and fundamental data, we have the best shot at having good guesstimate in the market and really understanding what is likely going to happen next. This is going to be crucial here. If we hold this weekly 50 EMA, that's a good sign. If we start accepting beneath it and breaking it, then this is a potentially bearish sign where we enter a short-term or a long-term crypto bear market. And how this looks in the institutionalized space that we have since this bull run, truly, especially on Bitcoin and Ethereum, this is likely going to be seen. However, if we again lose this level, definitely expect further downside risk. If we look at Ethereum, Ethereum has closed beneath this resistance level of 4K. We can see the price action fought over this level for quite some time, but eventually we broke down, and we broke down aggressively. Again, there are not many orders stacked here, as we had a strong way up here, and now we're sitting also here at the weekly 50 EMA. However, that has not been very well expected. Overall, also for Ethereum, we're still in a bullish trend. We have a higher low here, a higher high, and a potentially higher low wherever we may form it here. So we're still in a bull market. However, this doesn't look overly good, as we've lost this key 4K level, and we have seen in the past bear markets, once we have lost this level, it is hard to come back for Ethereum. Solana as well doesn't look too great. We did lose the $200 support and resistance level. Again, we broke beneath it here, and then we tested it as resistance and then sold off further. It remains to be seen what price action does. If we come down all the way to $130, that is a key support level for Solana. This might present a great buying opportunity. For now, we're truly in no man's land, as crypto assets likely follow Bitcoin's lead. So Bitcoin is really where you should put your attention. If we look on the equity side, we can see the S&P 500 has again had this strong bullish run since beginning of April, where we had the tariff announcements. We can see it has strongly rebounded, and there has not been any meaningful pullback since then. So the stock market still looks in a very healthy stage, even though we have seen some stronger sell-offs this week. What we have seen overall, the AI stocks are still powering the Nasdaq as well as the S&P 500 to new heights. From a valuation perspective, most of them still look fairly healthy, as their profits are in line with the valuation growth and the stock market growth. The stock market looks much healthier on both the S&P 500 as well as the Nasdaq compared to Bitcoin. However, as crypto investors, this is truly the line in the sand where we want to see a reversal, and if we continue to break down, this is truly not a good sign. If we look across altcoins, again, they have suffered already a lot, with Ethereum being at 3,300 and Solana being at $150. So they have suffered a lot already, and as I always preach within Beyond the Market, where serious investors strategically position themselves in crypto, is to take profits on the way up, and it was very important, especially on Ethereum, to take profits after such a strong acceleration to the upside. So we took a lot of profits over here at around the 4.8K level. That has paid off. Now we're again at 3,300. If prices start to calm down, especially on Bitcoin, and we can see that the weekly 50 EMA is holding, there might be a buying opportunity here as well on Ethereum, but it remains to be seen what is happening on Bitcoin. If you took some value from this market update and you've understood where we are in the markets right now and what scenarios we have for the bull and the bear case, then please subscribe to this channel. Again, we will cover crypto investing knowledge weekly on this channel. So please subscribe, and see you in the next video.